Hello viewers, welcome to my channel again. So it's your boy Pedro, and once again I'm here to give you the latest on the Bitcoin and cryptocurrency market. As usual, undiluted, unbiased, and unfiltered breakdown and analysis. So on Friday, my last broadcast came on Friday morning, early hours of the trading day. I made mention of the fact I made a prediction that the market was likely to head south. We're likely to see a huge sell-off, and I said I hoped to be wrong at the end of the day, but to God be the glory, it happened exactly as I predicted. There was this huge sell-off on Friday. Markets opened the day at 44,896, close to 45k. Made a high of 45,200 and went south to 40.6k US dollars. So the following day we had something that seemed like a doji formed, which is like with decreasing bearish volume. A red doji with decreasing bearish volume, which to me signaled the sign of exhaustion from bears. So we're headed back north again, but don't be carried away just yet. The good news for the market is that despite the huge sell-off on Friday, we're unable to retest and break through it. We're unable to retest and compromise 39.6k, which seems to be the swing low to beat to head further down south. So we closed, we had a low of 40.6 and closed the day at 42.8 again. The territory the market loves so much. So you can see we are currently back in a range. I made mention of the fact that we have two territories to beat to the upside, around 49k, close to 49k, and then to the downside 39.6. Failure of the market to beat any of these two regions would only result to mere consolidation. So that is what is happening exactly. So don't be deceived just yet. Don't be carried away by the little grains you're seeing from the market. We are back to consolidation, and I've said this a million times. That's 70% of times this is how the game is played. So this is a trying time. These are the periods the market gets to test you so much. If you come in here with very huge expectations, expecting the market to always be to the upside, I'm so sorry to disappoint you. You'll be in for a very long ride. So we were, after the major crash on 7th September, we headed towards a 2-week consolidation, which we broke out after 2 weeks, and then we headed further down south, and then once again we're back to consolidation again. So the good news for the market is that the market was unable to retest and compromise 39.6 for now. So we're back to consolidation, and we're currently consolidating between 45k and around 40k. You can see the market after closing the day at 40.6. we headed 40.7 on the day we got to 39.6. we've been heading north. We headed to 45.2k. we're headed down south again to 40 again, 40.6 again, 40.6 again. So you can see it's a clear case of consolidation between these two regions, 40.6 and 45. We're headed back north again. So we're currently we're currently at currently made a high of 44.4 thereabout. So we're tending towards the 45k again. So a clear case of consolidation between these two regions, and this is perfectly lining up with our 42k territory I played around with during the almost 3 months of consolidation. If you remember very well this chart, if you remember, this is a very familiar chart. If you've not seen any of my previous videos, earlier videos a couple of months back during the major consolidation of almost 3 months, I made use of this chart, and you can see that the market has respected it so well. It seemed as if it was just me, but you can see the market has respected it so well. We're back into this territory again, which is like enemy territory. So this is like the last chance for the market to have any hope of not heading further down south. If a major compromise of this would expose 39.6, and then we'll head further down south to form another new lower low. So as it stands now, we're inside this box again, and it's working out perfectly. As you can see, we're within the 40.5 and 45k, this region. That was the top of the consolidation that I named the 42k territory during the 2 months plus consolidation. 30k seems to be to the downside. I won't be going to that now. You can see my previous earlier videos too for more clarification. I'll just be laying emphasis to where we are right now. So we're currently here, and the good news, aside the fact that the market failed to test this 39.6 lower low, we are currently experiencing intraday higher high formations, higher low formations in the process. As you can see, the market is neither testing the lower lows, it's even failing to get to those directions, but rather are forming higher lows on an intraday basis. So the market is forming this upward trend line to the downside. So we're currently looking at a pennant formation, pressure from the upside, and a counter move by the market, by the bulls, from the absorbing the pressure from the downside, and resisting, defending in like manner by preventing the market to head further down south and form newer lower lows. So that is it. That's one. And then you can see that in the process we're forming something that looks like a double bottom. This this low came back to test this region. So for my objective rules for a double bottom formation, this is it. This is enough. If this had come down to this point, would have had like a triple bottom, but we're currently experiencing what seems to be like a double bottom. So the neckline coming out 45.2. So so if the markets can come up to beat this neckline, the next target will be a resistance coming out, which this 45.2 is a ton of confluence around this region. You can see it is the top of this 42k territory, lining up perfectly with it. It is also lining up almost perfectly with the 50 EMA, 50-day EMA. So you can see the 50-day EMA in red, lining up perfectly with the 45k as well. And I'm going to be showing you another confluence. It is let me be zooming this in so you can see. It is the retracements, this last bear run to the downside. This is lining up almost perfectly with the 61.8% retracement of this impulse bearish move. So those are the three confluence around that territory, around that 45k. So it's going to be critical. It is also lining with the top of this descending trend line, the top of this channel, descending trend line channel. So there's a ton of confluence around this area. The market needs to come up with something extraordinary, increasing volume to be able to break through it. And if that proves to be the case, the next serious resistance should be at 46k, which seems to be 46k, this red line here, which seems to be the last major swing low prior to the market crash, coming at around 46.2k. so the market needs to compromise this 45k, which is in confluence with the top of this descending channel, and in confluence with the 50-day EMA, and also a neckline as well for this potential double bottom pattern first. Then the market needs to take out the 46k, and if it's able to do that, then we should be looking at taking out 49k, which is this swing low. If the market is able to do this before we can have that conversation of before the market can have a chance of bouncing back. So anything other than that, if they are unable to do that, then they need to come up with increasing volume. The volume needs to be more encouraging. The volume is currently not good at the moment, so they need to come up with that. Otherwise they're going to face serious resistance even at this 45k. If the volume is not enough, they're going to face serious resistance that could send the market back into consolidation, or if the bears are strong enough, send it further down south and form a new lower low. So that is it. If you look at this from the total market cap perspective, you're going to be seeing that the market is currently reacting to a major level in the market, which is the $2 trillion level. Hence the resistance you're seeing currently. $2 trillion was the high of yesterday, 2.002. It is the high of today. We've had 2.012. so the market is currently at that resistance. Hence the price action you're seeing right now. So other than that, if you translate that to the Bitcoin chart, you can see that yes, that 2.002 is lining up perfectly with 43.9k, which seems to be the swing low for this particular point. Swing low formed on 19th August, coming at 43.9k. so that is why we're currently having that resistance on the Bitcoin chart. We're having a low, we're having a high of 44.35, the high of yesterday coming at 43.950, which is almost perfectly in line with that swing low. So if I'm going to be drawing a horizontal line to that effect, you should see that clearly from here. 49, sorry. So if I'm drawing a swing low, okay, so if I should put up a swing low here, 43.9, great. So if you see this, if you see this swing low, just this horizontal line drawn now, you can see why we're currently having that resistance and see rejection of that point yesterday and today, hence the resistance. So that is just it from the market. Now the market needs to, we are currently back to consolidation. That's the summary of everything, so don't get carried away by the greens. These are the market needs to has hurdles in front of it to get past through, to get through before having that conversation. Anything between 49k and 39.6, which is almost 10k difference in dollars, is consolidation, like I said before, and that is what we currently that's what's currently happening in the market right now. Nothing different. We need that. We definitely are experiencing the start of a downtrend, but we're currently consolidating, as has always been the case, as it was back here in May after starting this making this first move, downtrend move. We had to consolidate. This took for about 3 months, close to 3 months. So we are currently back to consolidation again after heading down south and forming this new lower low. So for how long this is gonna go, nobody knows, only God knows. So that is it from me till we compromise 39.6 or 49. We will still be in consolidation. Thank you very much. That is the much I can take from the market today. I hope you got value from this broadcast, and if you did, please let me know in the comment section. Feel free to like, share, comment, and subscribe as well, whatever platform, or follow whatever platform you are viewing this from. And remember that this is, as usual, for educational purpose and not to be treated as financial advice. Forex, crypto, and all financial instrument trading is a risky affair, so always endeavor to carry out your own research before entering any trade. Do have a lovely trading week ahead. May the bulls be with you, at least for now. Bye bye.